Good evening, traders. It's Simon at Kairos Capital Markets. A request that some of you keep asking me is to explain Fibonacci pullbacks, how you use it, why you use it, and all the bits and bobs in between. So I'm going to go through with you now just to give you a few examples of what you use it for and why we use it and why it's so important. So Fibonacci itself, in the whole of the universe, if they look at scientifically, everything is worked out to be 61.8% retracement. So you could say the 2 steps forward, 1 step back kind of saying is what it kind of refers to as well. So what it means is when you move in a certain direction, you'll then pull back or go back 61% back of that whole entire move. So if you moved 1,000 meters forward, you then move back 618 meters back. That's what it's really ideally about. There are some other figures with Fibonacci as well. That would be the 382 level and the 0.5 being halfway. So they're the three I use. I know other people use more and there's more extensions, but this is just a very basic outline of how to work out and how to use Fibonacci. So here's an example here. Let's say, for example, you saw this trade here. Let's say you're bearish here, okay, for an example, and you think that it will carry on going lower from this point here. So you think, where is the best value area to sell from if you saw this chart here? Well, one way of working it is Fibonacci, and all you do is this: is you draw it from, for example, if you think it's going to go lower, but you've got to pull back to a higher place of value, so you just go the direction of the trend, click and drag to the very bottom, and you get these levels here come up. So I'm going to zoom out a little bit there for you. 382, 0.5 and 618, they're the three levels I've got there. I've got 764 and the same for my stop. It's not something I'd actually trade off of, it's nothing I really care about, it's just there. Sometimes I might put my stop behind it, so ignore that as a trading thing. But you want to look at these three levels here: 382, 50 and 618. So prices come down and you're looking for a pullback, you are. And if you notice here, it pulled back and tested the 618 retracement. So this actually moved all the way down here, then pulled back 61.8% of this total move going down it did, and then obviously then carried on going down. So what we could do now for the next leg, we do the same thing again. So on this one here, you want to know a pullback to this area here. Where's the best place to get in at? Just click there, drop it there, and you can see now that the 618 is here, the 0.5 is here, and the 382 is here. So it draws it all for you straight away. And that's all the Fibonacci is about. It's when the market's trending and you feel that the market needs to pull back to a certain area of value, where does it pull back to? And this happens across all the markets. Obviously a ranging market, it's not going to work because it's not very good at all for a ranging market. But if you say, for example, looking it's at euro pounds, like for example, was any proper pullbacks there? Nothing really of any of significant pullbacks there as such on that chart. The weekly shows you a bit better here. There we are. So for example, we saw it went higher and come down there. So we're doing the opposite now. We are, so we say we're bullish from the bottom to the top, so there's the whole entire move up. This is the pullback, just tested the 0.5 almost, but tested the 382, then carried on going again. So then it carried on going up, it did. So what you do is now is, where's your next pullback? Well, this whole entire run from here, the pullback itself, all the way to there, that's the whole entire run up, and you notice how it pulled back to 0.5 Fibonacci retracement. So from the very start here at the bottom, the run was all the way up. Well, this isn't really a pullback here. These aren't really pullbacks. They're not very good. If you look at the Fibonacci levels as well, they don't even reach the 382 level. So it was never really a proper pullback. So you see here that it goes right to the very top and then fell back down to this area here. So 0.5 was quite a nice area there for a pullback. And again, you can say here as well. So from this low here to this high here, we go again, like that, to the top, and the price pulled back down to 0.5 retracement. So what that means is price moved from this point here at 832 all the way up to 932 and then pull back half of that to 881. So if you work that in pips, it will be, well, you work out in pips, you can see it'd be half pretty much. So that's all Fibonacci does. It just tells you the pullback in a trending market. If it's ranging like this here, it isn't going to work because it's not trending. So it's only for trending markets. And if I show you along here, we can see it here, for example. So on this one here, you can click down there. You notice how it did test 764, don't worry about that. But what I'm trying to say, it had a very, very deep pullback. It actually broke all the Fibonacci levels as such, you see there. And so it doesn't always obviously work every time, but you have to put it in there because it does pull back. It values the pullbacks. And when the market is trending nicely, that's what you're looking for. So again, you can go into other charts here. I'm just going to pick one here, Aussie dollar. What's on Aussie dollar? Let's have a look. That's not too bad. So there, the pullback from the run from here all the way up to here, and it pulled back to there. So let's show you the Fibonacci on that one. With that there, this area here is not pulled back to there. It's not a proper pullback, but go to there though and come across. So sweep it up all together. The pullback itself, it come up to there, then come back down to 0.5 again. So this whole entire run from the 7th of July to the 15th of August, this was. So it had a run up, then pull back, and then had another run up, then another, well, let's say another pullback. It actually started collapsing down. It has, the trend has changed here, you see, yeah? And that's all you're looking for. So it just helps you with the trend itself, and you got to know, I suppose, when to use it a bit more than just willy-nilly anywhere you want. But if you think there's going to be a pullback somewhere, that's what I use it for, and that's how I do my 1 hour trades. I'm trying to find another chart for you. Here's an example here. So this one here, I think it'll pull back down to this level here somewhere. Obviously, so this is currently the market. This is Kiwi dollar, and if you put that there, the level of threat 2 is just below the 715 level. So I think around here it'll pull back to, just because you've got confidence there. But this is what I'm expecting. So it runs up there, then has a little pullback. Hopefully gives a signal, then would then either carry on going up or whatever it normally does. But I believe it'll pull back to around this area here somewhere. So like I say, if you're going to do a trade for just an example, please don't do this as a proper trade because I'm just using an example. You could do something like that, 618, do a little 1-to-1 like that, and go, that's my trade I want, because you've got the pullback there. Now sometimes I may put my order on 618, do something like that, and have a really, really tight stop like that. Because that's worth it, 3%, that's worth it if you think it'll do that, and there's nothing in the way and everything else. So there are ways of way you trade it. Having a strategy is different to actually how you use the tool, but using the tool itself is just to identify the pullbacks as such, you know. And on this trade here as well, you can turn and say from there to there, where's the pullback? Well, you could say, well, I think you could pull back to 0.5 here. So this is the overall trend in this is bearish. There's a high, there's your low, there's your lower high, here's your lower low. Where is your lower high going to be? And your lower high could be around this area here somewhere. It could be rejecting threat 2, you never know. But what I'm trying to say is you could say, I think short term it could go up back to threat 2 again, put some bearish price action and collapse back down again. So you can use the Fibonacci in 2 directions here. So you understand now that the pullback itself from here to here is pulled back there already. And at the same time, you think I may get another little long here and go that way there. So this is a little pullback there. So you've got 2 Fibonacci levels in the same thing there. So you get an idea of where the market's going and where there's a probability for you to place a trade. I know it's a little bit complicated, but we'll go through it bit by bit each week, I think, adding bit that. Any other questions, just give us a shout. And hope well, guys. Take care.